Hello, welcome to IGTV. I'm Angeline Ong, and this is your special look to the week ahead starting the 16th of October. Now, we've got a wall of earnings, especially after the US banks kicked off proceedings, and we've got also a lot of economic news. Let's start off with Monday. We've got China trade balance figures from the Eurozone and also the New York Empire State manufacturing data from the United States. And then on Tuesday, it's Australia out with minutes. This will be interesting after the Australian central bank stood pat on interest rates, but left the door open to further hikes if inflation came roaring back. The UK is out with unemployment numbers. ZEW from Germany will be interesting. And the key one to look out for from the US will be retail sales. Midweek, it's no less busy with China out with its third quarter GDP growth rate. Retail sales numbers too there ahead of its Singles Day event. And from the UK, look out for CPI and PPI along with the retail price index as well. And the building sector along with the Fed Beige Book will be of interest from the US. On Thursday, Japan's trade balance and house price numbers from China will be key from Asia. And we've also got initial jobless claims and existing home sales from the US. And we end the week with more data out of China, loan prime rates there, consumer confidence figures, the most important out of the UK, along with retail sales. We also have inflation data out of Japan and public sector net borrowing numbers from the UK. And look out for the Baker Hughes oil rig count too. Joining me now all the way from Chicago is Tom Sosnoff from Tasty Live, part of IG. Thank you so much for joining us. I mean, we've seen such a huge amount of developments and news and geopolitical tensions in the last week. What's fascinating, Tom, is it looks like we throw everything at the market and it seems unhinged from any of these events.
It's unbelievable, isn't it? It's really a testament to what we call efficient market theory. And it's a testament to the market being able to normalize and almost commoditize everything. You know, when you think about it, Angeline, you can go back in history, like, decades trading wise, and geopolitical events used to create, much more than, 15 minutes or 30 minutes of or 3 hours of nervousness, fear, and just disruption to the markets. Now, this is one of the worst human catastrophes we've seen in a long time, what happened last weekend. And we basically, the markets were able to normalize within, an overnight session. So I think you're right. I think that this is just an incredible phenomenon of just a lot of capital and efficient market theory, just kind of, really normalizing risk.
So, Tom, how does one trade this efficient market theory and look for those volatility sparks?
Well, I think the takeaway from it, because I don't think that you can't look at something like, you can't look at geopolitical risk on a big wide lens and say, oh my God, this is the practical action I should take here, or this makes the most sense based on some macro or just some very wide lens. I think what you have to do is you have to recognize that, what the world that we're living in today, which means that you will do what you wanted to do to start with, and just look for small pockets of emotion to create maybe a very small pricing opportunity that you're waiting for. Like, for example, the market opens down Sunday night or Monday morning by 30, 40, 50 handles in the S&Ps. And all of a sudden you say, okay, this is a good entry point for me because I wanted to get long anyway. And, now the market has afforded me a very short-term window. I just think what it does is it should take some of the outlier fear. A lot of people don't trade or don't like to invest because they're worried about risks they can't quantify. What this does, Angelina, is it sends a message to all investors and all traders that, hey, you know what? That stuff you're worried about, that risk that you can't quantify, the market does it for you. So don't hold back. Do what you wanted to do in the first place, and don't worry about things you can't control.
Wise words there from Tom Sosnoff from Tasty Live. We'll be checking in with you next week to find out more about where the markets are taking us with this efficiency theory. Now let's move on to corporate news as well, because it is slammed in the coming week. We've just had the big US banks out with earnings, but next week, take a look at what we've got on the schedule. Rio Tinto out with Q3 operational numbers. Bellway, Bank of America, the next big bank to report. Goldman Sachs is also a key mover there. Johnson & Johnson and United also out with third quarter earnings. The airlines will be, of course, particularly interesting given what's been happening out in the Middle East. Many of the US airlines and European ones as well starting to kind of think about what to do with their flights to and from those regions after halting after the developments over the last weekend. Later on in the week, look out for Whitbread and Bellway. They're both out with earnings as well. Really interesting space, especially after Travis Perkins, the building supplier, came out with details earlier this week saying that demand remains very soft in the September month. ASML, Just Eat Takeaway, Netflix, Tesla, two of the big tech ones to look out for, and EVs, of course, and Procter & Gamble out with first quarter earnings. Later on in the week, we've got Deliveroo, Dunelm, Philip Morris International, AT&T, and American Airlines to boot. And we end the week with Schlumberger out with third quarter earnings, along with American Express. And that's your look ahead to the week ahead. I'm Angeline Ong. For more analysis, do follow me on Twitter at Angeline Ong. This is IGTV.